I mean, the really bad news is don't expect to go back to the 100x. So doesn't mean you can't go back to that value. It's just that could be 5 years of work to get back to that valuation. Just, you got to keep doubling the company at a pretty reasonable rate. So I think I would look at historic norms and, whether that's 2006 to 15 or 18 or whatever you want to choose, and just say, where did SaaS trade? 6x, 8x, 10x, 12x. Those would all been very good valuations. It all flows from how much profitability can a company have? What will people pay for that profitability? And then revenue is sort of just maybe a good proxy for how you can generate that. And then, there's a growth rate variable there. So the higher the growth rate, obviously the higher the multiple. But you have a lot of companies that have a really high growth rate where we still don't have a lot of visibility in what's the actual underlying profitability of those customers. So kind of even growth rate sort of masks some of the value creation that we see in the value. So the first thing is possibly, unfortunately, we should expect valuations to go down and in a sustainable way. But probably less for the employees and much more for the founders and people thinking about kind of building these businesses. I think focusing on just business fundamentals, and I would say that in the frothiest of times, but certainly now it's much more appropriate, which is what's your customer acquisition cost, what's your profitability, what the unit economics of customers. You have to care about your gross margin. We have a lot of companies out there that are like 40% gross margin businesses, but they trade like they are 80% gross margin businesses. That's dangerous, because at some point that 40% difference means it's going to be much harder to get to real levels of profitability. And so I think this is some of the reckoning, which is like the market is starting to figure out what things actually have software economics and what things are software enabled businesses, but they still have the economics of whatever that historic kind of industry looks like. And that's a very different model than for how you can value a company and an asset. Again, the problem with having something an investment that is, trading at 100x revenue, whether it's private or public market, is that's just, at some point, that's gambling that like the thing is going to be able to sustain that. And it's way better and way healthier to build an environment where, every day you show up, you build more value, you sell to more customers, you build a better company. And if you do that, if you do your work, the valuation will then incrementally sort of respond as a result of that. Otherwise, you're just paying for some company predicting what it's going to look like in 5 years from now, which again is speculation as opposed to, really investing in durable businesses.
What's your perspective on the state of Web3 right now in general, and where I guess the ecosystem is?
The Web3 is this one's a complicated one. It's like there's a lot of cognitive dissonance, because I actually think like I'm answering a thing which is just a made up. Like, I don't even know, like if you made up a thing and then I had to answer about a made up, like, I don't know what to do. But sure, the concept of more protocols on the internet and more openness on the internet and, more open source and more interoperability, those are great concepts. And those are things that people have been striving for decades and decades. And there's so many robust ecosystems building amazing open source projects and new protocols that allow for more interoperability between software. There's sort of our arbitrary idea that somehow we have to do that on a blockchain. I just like think of as well, somebody just said that is the case, and then somehow we have to now talk about it. Like why would it have to be a blockchain? Why do I have to pay a tax to replicate data 1,000 times for censorship resistance when like censorship, for these types of use cases are not like that sort of relevant. So I would just say like there's some philosophies that are being talked about within Web3 that are totally, interesting, great philosophies. And those are things that many people have been talking about for decades and decades. Matt Mullenweg at WordPress. I mean, like that is like the foundational, of WordPress is like, let's have more open source software that powers the internet. And then we'll have some commercial elements to it that people can participate in. That's great. But most of at least today, how Web3 is defined as we're going to use blockchain technology to power, things outside the financial realm. They just don't add up technically, or user experience wise, or frankly, I don't even believe demand from regular consumers. So I just don't think there's that much to even work off of. It's so funny. And I was just going back and forth with Mark Cuban, on Web3 stuff. And Mark was one of our initial angel investors. And he actually, at least back in the day, I can't speak to his current investment strategy, was maybe the most conservative of all investors. Like we were an angel investment. I think our valuation maybe was $750,000. That was our valuation. Okay.
USD.
Yeah, in USD, exactly. There was no other option back in 2006. So the world was USD based in at least in America, and he cared about cash flow like when we were 3 employees. So like we got that stuff built into us, and then eventually venture capitalists that we had, fortunately, were probably more on the conservative side. They cared about cash flow. We didn't generate any, but they cared about like what will the economics of this business look like at scale. So it was all kind of, I think, relatively built into the foundation of the company. But we did burn a lot because we were definitely taking the kind of get big fast approach in the early years. The reason we were high burn at the periods we were high burn was we made a calculated bet that every customer we acquired would be worth 2, 3, 4, 5 times more from a lifetime value standpoint versus the cost of acquiring them. And in an enterprise SaaS, if we can acquire an annuity of $1 million for $200,000, that might look like we're burning $200,000 in that first year or whatever, but we think it's going to pay back $1 million. That was why we burned so much. It was a high conviction bet on our particular market because the economics were sort of built into what we were doing. But that's not true of every business. And even in that case, we still spent money on things that we shouldn't have spent money on. I mean, I remember at the sort of peak insanity of in our particular situation from a burn standpoint, that's like 7 or 8 years ago. I was like, gosh, should we do an enterprise software Super Bowl ad? And I sent an email to a couple of board members being like, would this be a good idea? We'd be one of the first companies in enterprise software ever in SaaS that would do a Super Bowl ad. And they're like, no, it's a horrible idea. And we're like, okay, shouldn't do it. And we didn't do it. So that kind of discipline getting built in is usually a good idea as you're scaling a company. If you start at the most abstract concept of all, should there be a way to store things in a data store that is sort of always going to be universally accessible by you within some context that you can always get back to and don't require any corporation to sort of intermediate? Should that exist on the internet? I think that's actually a fine. Yeah, absolutely. Great. That's cool. That sounds good. Does that thing have to fluctuate in pricing? Does that thing have to be 24/7 traded? Does that thing have to be something where you lose it because you lose your keys on a phone and then it's gone forever? Does that it's so some of the underlying concept of the idea of a decentralized data store that lets us access and retrieve things from is like, okay, fine. But then by the time it ends up manifesting as actual use cases, it gets so derailed. And there's a good reason for it. It's because that thing that we just talked about would probably, like on a global scale, be like a $10 billion idea. Like that would be like the TAM of that use case. Because it would just be like, well, okay, how many things do you need to store? And what's the cost of that storage? And how many people need to access that thing? And it's just there's not that many things that fit that attribute. So the only reason why it's a $2 trillion TAM or whatever we want to say the market cap is because people have said, no, that thing is going to power the ability to have, virtual Gucci products, and those things then can be traded between people, and then you'll get rich. So it's like, yes, like the idea of a distributed data store that nobody controls is interesting, but the manifestation of it that has made it in the popular zeitgeist is because people are spending unbelievable amounts of money on virtual goods and things, which basically, I mean, the funny thing about even NFTs is like on a technical basis, they all basically just approximate another altcoin. They're all like, so everything is really just another altcoin, whether it has a picture associated or something else, it doesn't really matter. So it's just like, is somebody going to believe in the future that X new coin is worth something? And I haven't been convinced that there's a lot of use cases that would cause you to say yes.